Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Tuesday, the first trading day of the week. And it was a bearish one, pretty much right out of the gate. We popped right on the open, and that was pretty much it for the bulls today as stocks just continued to sell off throughout the course of the day, closing very close to session lows, right above 1,500 on the RUT, right above 2,800 on the S&P. So it's going to be an interesting open here tomorrow, I would imagine. And welcome out, everybody. Hope you all had a fantastic three-day weekend and ready to get back into it. Hope you had a great day both in and out of the market. On the earnings front, pretty light here. Only S&P 500 company coming out before tomorrow's open is CPRT. Tomorrow before the bell, a few names like WDay and YY reporting here, but really pretty light on the earnings front here going into tomorrow. As we take a peek at the day that was, we kind of popped right on the open. And for a brief moment, it looked like maybe the bulls were going to try, and it just wasn't happening. It wasn't happening today, as once again, trade fears kind of leading the way for the bears to sell. And good afternoon, Linda. Great to see you, as always. Hope you're doing well. As you can see, I mean, that first little while, look, first 15 minutes or so of the market day looked okay. We worked into our resistance from last week, late last week, Friday, and that was it. And then really kind of started accelerating the second half of the trading day after we took out that little intraday support that was established on Friday, and of course here today, pretty darn bearish close in my opinion. We're at a very interesting point. And good morning, Lloyd, and good afternoon, Micah. Great to see you as always. Hope you had a great Memorial Day weekend. As we look at this thing on the hourly chart, well, we're at support, right? We are at support. So, I know a lot of us, myself included, are looking at 28 based off of price history and the big round number. But even if you're not, we are testing a support zone going into tomorrow on the S&P 500. No matter how you really slice it, very bearish candle. We worked up early and that was it, closing right at these session lows. That is a pretty darn bearish candle, as you can see looking at it on the intraday. Good afternoon, Scott. Hi, Patricia. Great to see you guys. Hope you're doing well. So this is going to be an interesting one. You guys know pretty much what it seems like most of the market's looking at from a technical point of view on the S&P is at that 28. So this is going to be interesting. Again, the bulls, if they want something, if they want to take at least short-term control, they might have to start early or in the after hours trading session. So I think we can kind of move this line now as we're kind of doing any more broader analysis. Same as always, we're right there, which opens up the door. We saw lots of things breaking or knocking on the door of breaking down here today. Even saw some of the stronger areas getting involved in some of the selling, with utilities and staples both pulling back fairly steep here today, maybe making a bullish opportunity, but it's probably going to take some faith in the broad market. Good afternoon, Jimbo. So if this fails, it's hard to say for sure because we have lots of little things. We've got the flat 200-day moving average. We have a pivot swing low, about 2780. I don't really see anything too noticeable until 2720. And so that is going to be the primary level that I will be looking at for my next support zone. If this gives out, that's going to be lower highs, that's going to be lower lows. That is going to be, in my mind at least, the definition of a downward trend. I know many of us are taking bearish positions in the market, but I think that will push me a little bit off of some of the more, some of the bullish positions. I've been very open really to both sides of the market as it's kind of been doing this dance. On the other side of things, we haven't broke yet, right? A break is a break and a test is a test. And until we actually have broken through that support level, well, the only thing I know for sure is today it held by a hair, but a win is a win, right? So on the resistance side of things, we can certainly look at the intraday resistance from today to be a little bit of a catalyst. We've now tested that on two separate occasions right here about 2840. As we move over into the Dow Jones, same story. We got a little bit more room before we're testing that support zone, but very, very similar type of pattern. And you're right, Jimbo, a close is a close is a close, right? So, and hi there, Nadeem, great to see you. We're a little more room. But unlike the S&P that has stuff, the flat 200, a previous pivot, different things that might be tempting support catalysts, you look at the Dow Jones, and I don't think you make that same argument. We were here at every price at some point in time, but really any real support, we've got a big empty space. And so this giving out is certainly going to be a bearish signal, to nobody's surprise. Got a little bit more room before that is being tested, unlike the S&P that's kind of knocking right on the door there. So again, we're going to have an interesting open. And good afternoon, Amy. Good to see you, buddy. And I caught your traders take 5. I enjoyed it. Nicely done, sir. That was cool. It's always cool to kind of put a name to the name or a face to the name. So I talked to a lot of you guys on Twitter or here or Clubhouse or in in the halftime report or something. So it's always cool to actually see you guys. So yeah, you're not kidding, Jimbo. There is room, and that is the concerning thing, in my opinion, as we're moving forward. If these support levels give out, there's some pretty clear space before what at least I believe are significant levels of support. That hypothetical breaking of support's probably not going to make us feel better about a quick resolution to the trade war stuff. Obviously, that's still going to be something that we have to keep in mind from a volatility perspective. But yeah, that's pretty darn ugly. And so no doubt about that. Over on NASDAQ, I think you could say we've broken, but as you guys know, for me, it's 72. We just have enough history there. And it's kind of a little bit, much like the Dow, it's got a little bit of room between here and there, but still pretty not great looking at this point in time. Again, very important that this 72 holds. It's the domino effect. And we saw it on the other side at the beginning of the year, right, where we started to see index after index and stock after stock kind of look like this, where come out of the big selling right after Christmas, we rally up, everybody thinks it's a bearish retracement, but then we catch a higher high, close above that 9 starts to flip, and then it was kind of one index, one sector, one stock after another. And that's what's kind of interesting to the bearish side here. If the S&P breaks tomorrow, does that, probably, you see the rut doing the same thing. Maybe depending on how much we sell, you're seeing the NASDAQ and the Dow work into support. So it's going to be interesting. It is going to be interesting. Over on the rut, still holding 15 by not much, but again, we are still holding that 1500 zone. If this does give out, and I do expect it to be a support level, as you guys know, worth keeping an eye on. But if this gives out, again, it's not quite as much clear air or space as maybe you see on the Dow Jones, but there's just not a lot until we get into that 1475, that 1455, 1460 zone that we've looked at over the last little while. So, we're knocking on the door, which is going to potentially give us, entry points into things that have broken down going into tomorrow. Just off of the top of my head, the tobacco stocks got absolutely killed here today. Philip Morris, both, I would argue closed below support. If we take that support level out, that probably will open doors into, things that have, as potential bear triggers in my mind. On the other side of things, if we, hey, good tweet comes out between now and tomorrow, we don't have any follow through, probably won't see that. So I think we do need to be careful as we move into, at least tomorrow, but probably this week, with how important these price zones are, in my mind, at least in the overall market. So that's where we find ourselves. Nothing has really changed dramatically, but we are knocking on the door going into tomorrow. Everything pretty much sold off here today, and most things were fairly similar. You had communication services actually able to close in the green, the only sector closing up here today. Most things just kind of accelerated as the trading day progressed. This is an interesting one. We've talked a lot about this zone, and we've seen, this 54 give out. We're starting to see, and again, maybe it was just due to the day that was, but you saw things like Lynn, working down and working right into that old breakout point. You have APD, not quite there yet, but getting closer to support. So kind of like we talked about last week, still think there are opportunities, but they're probably bullish breakout opportunities that almost have to present themselves at this point next week for me to trust from a bullish point of view, at least. But you're seeing a lot more neutrality in some of the stronger producers, where you're still seeing plenty of weakness in some of the already poor performers. So again, this area, I think we have to take another little step into caution from a bullish point of view, or a little more bearish point of view overall, with just the way the individual components, with some of those strong producers slowly starting to work into what looks a little more like neutrality to me than strong upward trends. For so long, APD was invincible. Didn't care what the market was doing. All of a sudden, not so much. So an area we need to be cautious with, I think, as we move forward, at least from that bullish point of view. A lot of selling over in energy, certainly going to present some interesting opportunities. Let's pop into the energy and the materials side of things. We've seen things that have already broken down, like CPE that broke down last week, continuing that downward movement here today. Air products, again, we kind of see where that's at. PPG, in the material sector, still hanging on by a thread at some support level. XEC from, I'm not sure if this was stock or options report, but certainly hit my entry point here today. So more bearishness if we look at some of the bigger names in the energy side of things. Again, it's just getting tougher and tougher to make much of a bullish case. Clean breakdown on ExxonMobil. Chevron looks kind of like a weird little gap retracement. It may be undecided thus far. Oxy's been struggling tremendously as of late. Phillips, again, I'll just steal this line, still kind of hanging right below that old support level. So as we look at the energy space, again, for me, while I'm still open in materials, I'm a little more cautious. I've been slowly working that way in that space. In the energy sector, for me, it really continues to be looking at it from a bearish point of view primarily. And good afternoon there, Em. For me, it's going to come down to your rules, Emily, and so it's hard to answer that question with certainty. For me, the close will be what is important. And you get the good and the bad no matter how you spin it, right? With the close, you're getting better confirmation, but if we sell off dramatically once we break on the intraday, I'll wish it would have been earlier in the day. On the other side of things, if that support holds but breaks on the intraday, not as many fake outs. And so basically, I think it really will come down to your individual trading rules. Whenever it comes to a break, in my opinion, for my rules at least, it's got to be a close. And so that is where I will be looking at things. Also be keeping an eye on those other indexes. I think where they close could be important as well. Now, with that said, I'm not going to fault anybody for, any plan that they have that's, within their system's rules for protection, especially if we break major support levels on the indexes. So hopefully that gives you something to think about. Really, I don't know there's a wrong answer. There will be a righter or a wronger answer in hindsight, but for me, at least, that will really come down to your trading rules. And for me, it's the close that's always important. I don't like the little fake outs. Like I said, it's a trade-off no matter how you spin it. More confirmation is going to cost you a little bit more. There's no two ways about that one. Over in the financials, again, more weakness here today. We've talked a lot about the banks, and for the most part, they're still hanging by a thread, but they're not looking great. Still, putting that lower low below the 50-day moving average on JP Morgan. And hey, good afternoon, Marie. Great to see you. As always, I hope you're doing well. Bank of America, very similar situation. Again, almost looking like a little consolidation retracement. Wells Fargo, hanging by a thread at support. Citigroup, hanging by a thread at support. So these banks really do concern me as we're moving forward. If this gives out, some of the other areas have been a little stronger. that's going to be, just another little bit of a red flag, at least short term, if these banks do give out these support levels. Some of the insurance companies are, certainly didn't have great days, but are holding up trend a little bit better. So for me, I'm still kind of the same spot I've been the last week or so, open to the upward trending financial stocks from that bullish perspective, shying away from the banks from a bullish point of view. The banks really need to kind of break these previous swing highs, like so many things in the market, for me to start feeling comfortable about them, as an industry, but really feeling great about the financials, because they can, of course, they're breaking support, and I know most of them are still hanging in there. But if those support zones do give out, that's just more pressure on the sector. That probably means the market is giving out. A little bit of a cause for concern if that is the way that it goes. Industrials, very interesting. We're hanging right at that support level. So I think we got to go in and take a peek at some of the big names. Now, in my mind, we've talked a lot about this. This 73 is a pretty important level of support. We'll swing over to a weekly chart here for a moment. And that's going to look a little bit like a head and shoulders type of a pattern if we do give out on that support zone at approximately, I should say, not exactly, but approximately $73. We've seen plenty of weakness within the industrials. That's not a huge surprise. But, again, Boeing is still fighting the fight, but still unable to break out of that, old support zone. 3M just continues to it doesn't even need the market to sell for it to struggle these days. We'll take a peek at LMT. UNP closing below the 50, closing a little bit below that breakdown point. If we see more follow through, say into the 160, 8 or 168.50 range, it's hard to really look at that in my mind from a bullish point of view. Right now, it's hanging in there at neutral, but boy, much more downward movement. I think you'd have to take a little bit of a step and call that a sell signal. Honeywell testing the 50, testing support. So not much room for some of these bigger names to work through. Same thing with UTX, nice clean support level. Already set up that lower low, kind of like the broad market. It looks like CAT really been struggling, but hanging on that floor. Again, this isn't a great support zone, but this is all the support that we're working with, right? So that gives out. I would expect a continuation of this downward trend. UPS, again, kind of already drifting to the downside. It's the defense companies that are the most tempting. And so if this support zone's going to hold, Jimbo, because again, I think that's a pretty strong level of support at approximately 73 on that. And I think if the market holds that, has a good chance of holding as well. And so if we do catch support and see upward movement off of it, it'll definitely be things that look like LMT here. Certainly an interesting opportunity from a bullish point of view if we're seeing some upward movement in the space. Many of those individual companies, even if they're going up, the charts are still going to look overall bearish or neutral, if nothing else, to me. So there are still going to be a few names in the defense industry that might be catching my eye from a bullish point of view if we're able to hold this support, see some upward movement, because they've been able to hold trend. This is definitely an interesting looking one. There is no doubt about it. Might even be able to sneak down to an intraday from an entry point of view and kind of see a little bit of a little double top, just a little sideways, right, on this. So kind of like so many things, on the pullback, where we pull back, create that lower high, but hold that low. We see some upward movement, take out some of those highs. That could be an interesting place to look. Yeah, NOC, absolutely, Scott. Another good example. Nice little pullback into that 90 MA. Don't think we've got the confirmation in either of these cases, but these areas will still be interesting if I see some upward movement collectively in the sector. I think you have to applaud the relative strength of the defense sector. I didn't have a chance to look at LLL here today. See what they're looking like. Very, very similar, still above that 9. So still seeing some relative strength and some pretty decent trends still holding up over in the defense industry. Everything else is looking either bearish or will be looking bearish if that's all those support levels start giving out. Could be an interesting place for some bearish breakdown candidates as we work into the rest of the week. So I know I certainly will be combing through that sector here. Anything interesting, I'll be sure to throw up over on the Tackle Twitter for you guys as well. But lots of things hanging in by a thread at support, you can kind of see. Over in the tech sector, very similar to the NASDAQ, hanging right at that old swing low, a little bit of space between where we are and what at least I would consider that more major support level at $72. A little bit of space in between here. Again, we're just starting to see, and you look at the individual components and just so many of the stocks were in most of the areas that we're looking at are just either showing, okay, it's hanging in there. There's not a whole lot of NOCs and LMTs and 3Ls. More, there are more cats or UPSs in the market right now. And probably won't look better if those support levels do give out. But we are hanging in by a thread here at this old swing low on the tech sector. So again, we're seeing a lot of things right at or very, very near support, not only in the S&P, but kind of throughout the market. Probably one of the more interesting developments was the steep selling that we saw over here in the staples sector here today. Was certainly an area that's relatively held up pretty strong throughout the course of this last couple of weeks of selling, but got caught right up into it today, put in a little bit of a floor at 57, and when that gave out, it was just off to the races in the short term. Now we're still holding our trend, and we were able to close above this 50-day moving average. I think we can look at this support zone as the line in the sand as we're moving forward, at least short term. It was an old breakout point. We've tested out now 2 separate occasions. That would put us below the 50-day moving average. If that gives out, that would probably give me some concern from a bullish point of view and potentially some opportunity from a bearish point of view. But as long as we're kind of holding this, I still am okay with the staples sector as a whole. But again, it might be one of those areas that we have to be a little bit more cautious with as we're moving forward. Now, a big part of the movement here, especially in the first half of the day before the whole market started to sell off, a big part of it was the tobacco companies. You saw big moves to the downside on Philip Morris and Altria Group even before the market started selling. So when we looked at the market, it was kind of accelerated at the end of the day. These tobacco companies, they gapped down and really started running right out of the gates. So part of the reason this ETF is going to look a little scarier than maybe it is to my eyes is because of the big downward pressure that we had over there. But it wasn't all them, right? Selling into the 50. If we catch a doji, maybe there could be something there. Over in PG, selling, over in profit taking, still very nice upward trend in Coca-Cola. Pepsi did break its little breakout point. I didn't love to see that, but still potentially could catch our footing. And to me, this is a breakout play or bust in my head, at least. Walmart still hanging in there right at that resistance level. Of course, WBA, they always seem to be down or close to it. Mondelez, a little bit more of a pullback, though. So some of these areas pulled back certainly more than we have been used to seeing in the staples sector. Did see some pretty good weakness early in the tobacco space. So again, an area I think we can still have a bullish bias on overall, but I do think it's just a little less than maybe it was last week at this time or even Friday. That big candle is always going to mess around with the charts a little bit. Over in XLU, again, much like the staples sector, we really just kind of got going early and just kind of sold. I really would have liked to see that 59 hold. I think that would have been a symbolic victory, but that was not meant to be. Now, this is a pullback opportunity. We wanted this pullback opportunity, right? We just didn't want it all in one day. We wanted a red candle here, smaller red candle tomorrow, and a doji on Thursday, and that's kind of the way we wanted it, not the way that it came together. Still, in my mind, this breakout is still intact. I think we need to see a little bit of upward movement, so I can't see a scenario where I'm buying up a whole bunch of utility stocks tomorrow. Hard to want to buy after a candle that looks like that, but I still believe our breakout for the most part is intact, going to lead into that pullback opportunity if we're going to need a little bit of slowdown and certainly a confirmation candle. I would imagine that these, more defensive areas, if, will be hit at first if the market breaks support before kind of being the areas that, we've seen this, when the market breaks major levels of support, everything goes down, right? If it wants to, at least. But I do expect that these could be areas that could, peak, we've got to put that money somewhere, so the big money at least has to. So I will be interested in this pullback in the utilities. Hard to see that being for tomorrow. If I'm looking at things aggressively and I want to potentially pull, get into a steep pullback like this, I'm always going to want to recapture that 9-hourly before anything. So the price is right, but certainly the price action is wrong, so to speak. So exactly 6. It hasn't happened till it's happened, right? So an interesting pullback opportunity developing. Wish it would have been a little lighter here today, but that was not meant to be. Over in healthcare, quite a bit of selling. It's been holding up a little bit better than maybe certain other areas of the market. Certainly was not the case today. Pretty good volume in this space as well. Again, for the most part, continues to be an area that's kind of in the middle, kind of be in that no man's land, so to speak. So I still will be looking at potentially things from a bullish point of view. A pullback into this old breakout zone and this type of a pattern is something that can be appealing. Again, probably not hoping for that to happen tomorrow. Needs some sort of a slowdown. And we've seen, several patterns that look somewhat like this UNH. We saw that on Merck here, very similar, where basically see if this old resistance wants to act as a support catalyst. A lot of times those short-term moving averages are going to work into that to potentially act as support catalysts as well. Certainly also have the upward trend, so it actually can pull back a little bit deeper. So I still think there could be some pullback opportunities in this space, but I also think that there could still be some breaks. I've had AbbVie in my watch list for a bearish breakdown for a long time. And if it ever breaks down, I'll be there. I'll know it. So still has some ways to go, but quite a bit of selling over there here today. AbbVie, after, there we go. Amgen, I'm sorry, I was already looking at AbbVie. Amgen looking a little bit like a bearish retracement, right back into this old breakout point. We had some history over here. Maybe I'll go to a weekly chart so we can actually see that. But we can kind of see we've had some old breakout action in here, certainly acting as a little bit of a resistance catalyst, breaking down, closing below those short-term moving averages. Kind of the last line in the sand is this little swing low that maybe is catching some eyes here. But if we see more downward movement, that would look a little bit like a bearish retracement candidate to me. So we still are seeing things really on both sides. I think we do need to be very careful with anything that we're doing in the market, whether it's bullish or bearish, because of the volatility, but especially bullish because we certainly are seeing more fear than greed right now in the market. But there are opportunities on both sides in my mind over on healthcare. Some of those, reversing type of candidates like Merck, like United Health, might need a little bit of time, but could be something interesting. But if we're going to sell, there's definitely going to be some things that aren't looking all that great anyway. So there could be some bearish opportunities there as well. Discretionary kind of filling in with the overall market, just kind of hanging around, drifting a little to the downside. Major support in my mind still at 112. That's going to be the major turnaround point, but certainly showing some relative weakness wherever you might have that. We did have Starbucks sell into its 50-day moving average here today in a very strong trend. I thought that was interesting. Again, not a confirmation candle day in my mind, but a very interesting price point. If the market holds some support, I would expect some of these stronger stocks that are holding, their 9 EMA, as few of them as there are some in the defense sector, or things like Starbucks hanging out at its 50-day moving average, could be areas that could catch my attention if the support level is going to hold. I definitely thought that was a nice little close there for Starbucks. On the other side of things, Lowe's just continues to free fall post earnings. Yet it kind of took Home Depot down with it. Whoops, where'd you go, Home Depot? As well. after running up. Yes, McDonald's is in the discretionary sector, Jimbo. Actually was running up until it ran into its 50-day moving average. So there's a little sign of strength. McDonald's, take a quick peek at them. In a little bit of a pullback, not great looking. Definitely need to see some simmering down and upward momentum. Probably more of a breakout play in my mind, unless we get a little more clarity in the days to come. Actually had Amazon hold in all right there, but as you can kind of see, they kissed right into that 9. They're right below that 50-day moving average. Higher high today, higher low today, but a little bit of downward movement. That could, again, look like a little bit of a bearish retracement to me. So certainly not the greatest looking. Finally had not TGX. TGX was the other one that broke through and flew through its 200-day moving average. It was Target, though, that has been showing really great strength off of its earnings report. A little bit of selling over here today. So an area that's, again, I think when we compare it to other sectors within the market, I do think it's showing overall a little bit better, but certainly not quite as strong as it was in April at this point. Of course, what was, right? Except for maybe the real estate sector, which another one of those areas that's giving us a potential pullback opportunity. Now we saw pullback buyers jump in very quickly on this last big red candle. This certainly was a high. Again, much like utilities, I think this can present some really interesting retracement, bullish retracement opportunities in real estate. But I just don't think it can be tomorrow. Again, I know that not everybody is me and looks at things the way I do, but I need some sort of turnaround candle before I am there. But certainly, as long as we create a higher low than this previous swing low that we did set up here back just south of $36, I think this could be a retracement area for us as we work into the, short weeks are weird. I'm going to be messed up all week long, but as we work into, we only have 3 days left. But again, much like everything else, broadly speaking, hard for me to from a bullish point of view, bearish point of view, hey, we could break those support levels or confirm, per my rules, the already broken support levels as early as tomorrow on the open. But on the bullish side of things, I need that candlestick to kind of give me a little bit of confidence in anything that I'll be working with. And lastly, over in communications, kind of worked up. It was able to close in the green. It wasn't the greatest close ever, but hey, in a day like today, the bulls will take it. Facebook actually holding up very nicely here today, relatively speaking, still overall sideways, but showing a little bit, holding the 50, capturing, at least for today, that 9 EMA. I still think we kind of have to look at these resistance zones as signals. I don't know that everything in between is just in between in my mind, but definitely held up nicely today. Google, while its chart doesn't look great, was able to hold up here today, although it's hard to get too excited about that chart from a bullish point of view. But honestly, even from a bearish point of view, we've got 1100, which of course can act as a psychological level. We still haven't taken out the support zone. So, it's not a great looking chart, but has held up a little bit better than a lot of places this last week of selling. I think you have to give it that. Verizon and AT&T still kind of hanging around as breakout candidates. So not close today. Same thing with Comcast, a little more neutrality, but still holding trend. And of course, our friends in Netflix, I almost feel sorry for them when they were finally threatening to break resistance. That was when the market, that was when May hit and the market started to sell. Not particularly great, but still holding their support zone. So showing a little bit of relative strength in the communication services, I would say, as well. But I really think as we're kind of moving forward, the big story is going to be the broad market. As long as that's in play any given day, I think that's probably what we should be looking at as the number one thing. A break of the major support. Now the question isn't the break of major support a big deal. It's 28 the major support, right? If that breaks, certainly don't know that until we know it. But that's going to usually override just about anything. And I can only speak for the way I'm thinking and the way that people I've talked to, but I know a lot of people are using that as a little bit of a signal. So definitely probably not a bad idea to check in on the futures before the open, see where we're at here, but not be overly reactionary, right? We've seen plenty of movement in the futures. That's what's resulted in so many of these gaps as we're moving forward. But we're at a very important price point. There is no doubt about that in my mind, at least. Moving into the VIX, a little bit more of a spike, a little bit of selling is going to do that. Again, market volatility is still here. The trade war stuff is always right around the corner, and while it can impact any day anyway, is certainly more skewed to the downside, right? Traders have been looking at it as an opportunity to sell no matter what. Kind of an inverse over on gold here today versus the market is, the second half of the trading day, as stocks were really selling off, we kind of saw a little bit of money move into the safe haven, or at least maybe the safe haven that is gold. Still not a particularly great chart if you're thinking about, being a buyer in gold, but was an interesting development as the market was really selling. Again, it's still not, maybe it's not as correlated as it once was, but it's still got some correlation. It seems like when it's really scared, people will buy gold. So it's just when it's not so scared. On the resistance side of things, really not a lot has changed. I think from a purely aggressive perspective, we could make a case, at least a technical case, to, if we catch a higher low here and are able to hold this support level, which we've done so far at 1268, right? We've tested it a few times. We haven't won yet. But if we, are able to hold this, I think we could now look at the break of this 1288, 1289, 1290 as a potential bullish signal. Now that's going to happen after we've created a higher low, right? Right now, we're still basically in the middle. And so if we do give out, that should be a pretty interesting selling opportunity. But if I'm thinking about potentially as a buyer, technically, what do I need on this chart? I need that higher low, so I have that upward trend line and then that break of that resistance level. So this could be an interesting one if buyers want to come into it. They've kept coming in off of that support. It's still not a very bullish chart. I think we would all agree with that, but support has continued to hold, and it'll be interesting if the market does break support. I'm going to be a little more open to bullish signals in gold myself. So that's something, who knows how I'll want to act, but that's definitely something that for the first time in a little while, I'm actually thinking about that as a signal that I could be actually interested in. Bigger signals, I think 13 is probably the next level. And of course, 1268 or approximately 1268 for support. If that gives out, because we certainly, by the end of the, we're still a red candle here, right? There certainly wasn't setting the world on fire early. Really not a lot, right? We have that flat, at 1260, 200-day moving average to keep an eye on. Price-wise, though, it's at 1255 for me. So a breakdown here, certainly a sell signal, a tradable bearish signal, if we want it as well. Over on the other side of things, silver, not so hot, continues to show a lot of weakness, quite a bit of volume here today, did hit another low, just continuing to drift. Sometimes it's slow, sometimes it's fast. We had that, bearish retracement, that one-day bearish retracement, right? I always prefer when it's 2 or 3 days. They're so much easier to trade in my mind. But some downward movement, just yet another lower high, another lower low here. Don't really have a lot of support, until we get to that $14 range. I would keep an eye on, that 14 and a quarter, which is about what our intraday low was here today. We do have a little bit of history there, and it is a nice round number. Still, in my mind, bearish or bust on silver, where I'm a little more open-minded on gold, at least if some good signals are able to develop. Natural gas, this is, let's give you, a boring day. Everything else was moving. Let's just end right in this trading range that we're in, right? And so not a whole lot new to report here on the natural gas side of things. Certainly have now, started the week with a lower high, lower low off of last week's candle failure at the 50 and the 9 weekly. We're kind of hanging on that last little level of support as we kind of talked about the end of last week. If this support zone gives, I would expect not a lot of reason to think it's not going to come back and test this low, which could be really interesting, because if we do come back and test that low, we know that that is where we have all of that long-term support. If that low gives out, that's a tradable signal in my opinion, and a pretty decent one at that. Hasn't happened yet, still could go the other way. Right now, we're stuck kind of in this little rangy mess, and probably, unless you're playing it on the intraday, probably a difficult sell unless you were looking at the bearish retracement off of last week's candle, or you're betting on that long-term support holding, in which case you're probably already there. New trades, we're going to have to work through this little range that we find ourselves in. And lastly, over crude, speaking in a range, just kind of doing the dance between 58, and we haven't tested 60 yet, but we're kind of smack dab in the middle of this trading range. I would expect 60 to be a pretty important level of resistance, so a break above that could be called a little bit of a bullish signal. I think the better way for it to play out, though, is to continue to drift, march slowly into that 60, work into those averages, see some downward movement, and look at it from a bearish perspective. I think right now you have to be looking at the crude technicals, more bearish than bullish, at least below $60. But even at that, again, we talked about this on Friday, what could have been a bullish retracement, and a pretty good looking one at that, was taken away last week. Now, maybe this is where it's going to be, maybe a doji and we break back above 60 and traders are willing to trade into that. I guess I could entertain the idea. I don't love it though. Anything below 60, I think you have to be extra cautious from a bullish point of view. 60 and 58 or 50, I'm sorry, 57, 40, where we set up those intraday lows last week, kind of the support levels and resistance zones I'm looking at. I expect 60 to be an important level of resistance that should be a little bit of a challenge. Breaking above it, I'll give it a little bit of a pat on the back, but I would be more likely looking at bearish opportunities at 60 than hoping it broke above 60 for a bullish play. And certainly a break of the support zone, I think we could easily call another sell signal. Really not a lot until $56 to kind of potentially at least act as a support zone. We'll have a lot of little things. We've got some stuff in that 50, 53, 54 range beyond that. But now we've made lower highs, lower lows. I'm going to be looking at it from a bearish perspective until we kind of reverse that on the other side of things. So, ladies and gentlemen, it's going to be an interesting week. I'm really interested to see if that support holds. I know a lot of people are looking at it, and as ugly as it was second half of today, all of those support levels were able to hold. Will they be able to hold tomorrow? That is the interesting question. So as always, I think as long as we're holding those supports, we continue to at least have an open mind to some strong bullish setups. But certainly, I think it'd be foolish not to be open to some bearish signals at this point in time. And they're out there. There are still bullish ones, right? We saw a few. Starbucks sitting on the 50. You've got those defense stocks holding very nice trends. There's still interesting trading opportunities to the upside out there. There are just probably more interesting bearish charts right now, but that's usually the case when we're at support, right? That's certainly to be expected. So, of course, make sure you're planning ahead, executing your plans, not being a reactionary to the market, right? It's really easy to want to do that. Oh, the market's tanking. It opens up at 27.90 tomorrow, and oh, the market's tanking. I have to go crazy. Have a plan and stick with it so you don't drive yourself crazy. You got stars for a bear. Let's take a quick look here. I've certainly not opposed to stealing a chart from you, Emily. So after we came out of this nice little triangle here quickly, just like that, this is an interesting one because it's right at this old breakout point, right at that 50-day moving average. What does their weekly chart look like? It looks a little bit like a pullback, but it needs to hold this zone, right? It doesn't have too much more to pull back. This is an interesting looking chart, Emily. I'm not sure. I think there's was an interesting bearish play. I think right now, we're just kind of at. Is this a deeper sell or is this a pullback on the weekly? Definitely interesting. Boy, that was some fast movement when we came out of. I should have paid more attention. I don't know who I was talking with when I drew these lines, drew this little triangle, but I guess I should have paid more attention. That was some pretty fast movement once that gave out. So thank you, Emily. As always, guys, it is certainly my pleasure, and I appreciate everybody's time. We've got the coaches show tonight doing the long call, I believe. So that ought to be a lot of fun for all of our pro members. So enjoy that as we continue to work through the playbook over there. Of course, Thank you so much for joining me. If you are new around here, do be sure to subscribe to the channel and smack that notification bell. You can always, of course, join us over at Tackle Trading on Twitter. You can find me at FrankMartin23 on Twitter as well. If you're not a pro member, we certainly invite you to head on over to tackletrading.com. We'll get you set up with a free 15-day trial so you can go hang out in the coaches show here tonight, check up on the scouting reports from this past weekend, and of course, you're always invited to join us over in the clubhouse as well, ladies and gentlemen. Yeah, it was great to see you again, Marie. Always a pleasure, and I hope you're doing well. I'm sure you are. I certainly know. I know that Marie knows what she's doing. But it's always great to see you, and hope you and the fam are doing well. All right, ladies and gentlemen. Well, hey, get out of here. Enjoy the rest of your Tuesday afternoon. For our pro members, do enjoy the coaches show this evening. Should be a lot of fun going over long calls over there. We're also going to do a special Mind of a Trader again tomorrow night, it looks like. We'll talk a little bit about that here tomorrow. But that should be a lot of fun with Coach Mark, another Mind of the Trader nighttime edition. Yeah, Mark's a creature of the night, so those are probably a lot of fun. Oh, nice, Marie. That is awesome. Well, that's certainly a good reason to not be here. Or I'll just be happy to see you when I do. That might mean that I'll see you in other places more often. But that's really cool. And congratulations, Maria. Marie, certainly well deserved on your part. So we'll miss you, but we'll understand. All right, ladies and gentlemen, get the heck out of here. Enjoy your Tuesday afternoon. Be ready for tomorrow. It's going to be an interesting one way or another. Support bounce or support break. One way or another, we're at a price where something's going to have to give, right? So it should be fun. So get out of here, guys. Thank you so much for your time. Always more fun to do this with you guys than on my own. So thanks for hanging in there with me. As always, have a fantastic Tuesday afternoon. I'll see you same time, same place here on Wednesday. I'm going to be off all week long. I can't believe I've got the days right for, I think, the whole show today. I'll have to rewatch and see. So thanks, guys. Have a great day, and I'll see you tomorrow.